Today, I specifically want to talk about the 15 things I would do differently if I was getting started on Forex trading for the first time, looking back to when I started, to my current amazing life as a trader. And believe me, this video is not just for beginners. This is my entire trading journey, from when I was a broke beginner to when I started making more than $50,000 profits per month. You know what they say, the bigger the level, the bigger the devil. I have divided these 15 things into 3 segments. The first segment is called the starting out phase. These are the things I experienced when I was just starting out. The second segment is called the experience phase, and the third segment is called the Proman Phase. As you place your full focus on this video, follow me as I unveil them one after the other. But before we get to all of that, do well to like this video to help other traders like you to find it and never repeat these mistakes, and subscribe to our channel if you are new here. So my tribe soldiers, let's get down into this video. Beginning with the starting out phase, the first mistake you'll make when starting out is not knowing the kind of trader you are. If I asked you a quick question right now, what kind of trader are you, tribe? What will be your response? Some of you don't even know yet. And that's how serious it is. If you don't realize the kind of trader that you are, there is no way that you can be successful in the market. You know, we humans, and as our faces are different, so our behaviors and our level of tolerance are different from each other. The Forex market is made up of different type of traders, and some of you know them by now. We have the long-term traders, the swing traders, day traders, and the scalpers. All of them have different type of risk tolerance and level of patience. We all know the long-term traders take trades that will last months or years before they close their trades. The swing traders take trades that last days or weeks, and day traders take trades that will last for some minutes or hours, and the scalpers take trades that lasts anywhere from 1 minute to 30 minutes. When you are starting Forex, you have to choose one for yourself. The higher you go, the more you will have to risk, and I believe you all know yourselves by now, and you know your level of patience already. So you should stick to the one that is more comfortable for you, the one that will go according to your risk capacity, and based on your patience level. Don't try to be a swing trader, a day trader, and a scalper at the same time. Choose only one. The second mistake you can make when starting out is not having a mentor. Although you can start with self-taught and waste a lot of years trying to figure things out, but if you want to have a smoother journey, you will really need a mentor when starting out. A good mentor will lead your hand and guide you through all the dark phases that you will go through in your entire journey, teaching you out of years of experience and giving you strategies and psychologies that he is tested to work a lot of times in the market. To find a good mentor, you must make sure he is the type that actually have a lot of evidence to prove his experience in the trading game. He must be a trader and not someone who comes to teach. Else you will end up like those who go to the university to study business from someone who does not have a business. A good mentor will shorten your journey, but if you meet a bad mentor, that will only be the beginning of your misery. I only began to see a good result in trading during my early days, after enrolling for a mentorship program. And like I said before, you can be self-taught and learn trading 4 years for something that you could have learnt in months under a good mentor, but whichever way you choose. This is one mistake I will never repeat again. If I was starting out today as a beginner in Forex trading. The third problem I had when I was starting out was figuring out a strategy for myself. This is one of the biggest problem of a beginner trader, and believe me, it's hard to figure out, especially when you are trying to be self-taught as a trader. I have personally taught on a lot of high profits trading strategies on this channel, but sometimes when you see how effective all of them can be on the chart, it makes you to start to act like a kid in a candy store. You want all of them to make all the profits from the market. But many of these strategies cannot work together on the chart. Combining all of them will bring a lot of confusion to you. You have to pick one for yourself Concentrate on that one that you choose, backtest it thoroughly, and test them on your demo account before using them on a real account. And you can also test them one after the other to actually find the one that works for you the best. Believe me, all strategies are not threesome. Some are very profitable, while others are not profitable at all. On this channel, you will find a lot of high profitable trading strategies that actually works in the market, with the step-by-step guide on how to trade them. Take your time and find the one that connects more with your personality. The fourth thing I discovered during my early phase as a trader was that I was trading with a lot of money that I cannot afford to lose. If I was starting Forex today, I will trade with only the amount of money that I can afford to lose. In trading, anything can happen, and anything is possible. A trader can flip an account from $100 to $1,000, while another trader can flip a $1,000 account to $100. They are all flipping accounts in their own way. But hey, before you start trading, make sure you can afford the risk. Don't go borrowing money to trade, and don't use all your savings to trade. It might not even be your bad strategy that will fail you. Sometimes you might just get too excited and enter the wrong lot size, and your account is gone in a blink of an eye. The funny thing is that some of you have had this experience, and you can clearly remember and relate as I explain this. The bottom line is, if you are not ready to watch your money go, don't deposit it into your account. Now, the fifth thing I will avoid, if I had to start over again, is quitting my job for full-time trading without being profitable yet. This is very common within beginners, and it's a trap. You might think you are escaping the trap of the matrix by quitting your job for full-time trading in order to become your own boss, but the truth is that you are actually entering into the real matrix if you are not yet a profitable trader. One thing about trading is that when you make your first little profit, you gain this excitement filled with sweet hormones that if you are not very careful, you can go to your office and fire your boss. But the truth is that 1 or 3 profitable trades does not make you a profitable trader. A profitable trader is known by the amount of profits he makes on each winning trade. You might have 3 winning trades, but in those winning trades, you might be making $5 and $10 per trade. But those $5 and $10 you are making will not be able to sustain you when you quit your job. All I'm saying is, make sure you have made a lot of profits that will sustain you for a very long time before quitting your job and focusing on trading full-time. Notice how you can relate to everything that I have been explaining so far and see how they really impact your life. The next segment is called the experience phase. When you are done with the starting out phase, the experience phase comes to face you. This stage is even more brutal because you are now becoming a better trader, and it will try to stop you from elevating, but you're still going to face them, else they will bring you down. The first thing you're going to face is trading without a plan. This is where you enter a trade because it has met your strategy requirements, but without a prior plan to execute the trade successfully. So you're not really prepared for anything the market will do. If I was starting out Forex today, I will make sure that I start trading with a plan, meaning that before I place any trade, I must have calculated the lot size I will use for that trade, my point of entry for execution, the amount of money that I am willing to risk for that trade, the amount of money that I am expecting as my profit for that trade, my stop loss, and my take profit level, and an area of break even, if necessary. And with all this in place, there is no way the markets will go against you unnecessarily, because you are mentally prepared for everything that will happen on that trade. Do this, and you will thank me later. Number 2 is to avoid following the crowd. Always remember that the Forex market is not like the crypto market, where prices are mostly moved based on hype. Forex is based on pure analysis, technical and fundamental. If you listen to too many analysis from a lot of traders, you will not know which way you will go. Trader A predicts a buy movements, Trader B predicts a sell movements, Trader C predicts a reversal, and so on. That is way too many confusion. It's better to learn and become a good analyst yourself. or listen to only one trader with good results to minimize too much stress and confusion. Number 3 is to never use a strong lot size. For a weak account, some of you love to take emotional trades. But here is what happens. Each time you trade without a clear goal, you are never in control of what you are doing in the market. When you place a big lot size on a trade, you place yourself in a state of emotional unrest. You keep looking at the chart with racing emotions to know if it has gone your direction or finally hit your stop loss. You are never at peace, and at the end, 9 out of 10, it's either your account blows up with a little move against you, or the market takes you out and then start moving in your target direction, and this time with much volatility. You will feel regret and anger immediately, but this could have been prevented, because if you had used a good lot size for your account, you would have had enough stop loss size to cover up for your trade, and therefore blessing you in the last price movement that went to your target direction. The 4th thing I will do is that I will stop trading against the trend. Many of you are trading against the trend, and that is why you are not yet profitable. The market is made up of different trends, like the uptrend, the downtrend, and the reversal movements. And these trends are very dominant at a particular time in the market. Following them in that particular time will make you more profitable in the market than trading against the movement. And once you have identified a trend, you should focus on following that trend for the main time, till a change. And if you don't know how to identify a trend in the market, I have taught on how to identify trends in many of my videos, so you can go check them out and learn how to identify a trend right from the beginning. The 5th thing I will do is to stop overtrading. The market is always moving, and one of the biggest temptation when you are trading the market and making some kind of profits is that you begin to see way to many opportunities in the market, and that will lead you to start overtrading, because every move of the market will begin to look like an opportunity to you. And that is when failure begins to knock on your door. You have to be very selective when you're trading the market. Not all trades are worth trading. You must make sure that the trade is very clear before trading them. This will help you to avoid overtrading and make you a very profitable trader. Now we are moving to the final segment of my experiences as a trader, and what I will do differently if I started trading today. And this segment is called the Proman Phase. If you are able to successfully pass the starting out phase and the experience phase, the next demon you're going to face is the Proman Phase. At this point, if you can be able to overcome these demons, you will become totally unstoppable in the market. The problems that comes with the Proman Phase is really affecting a lot of pro traders today secretly. And I will not only be telling you the problems, I'll be giving you the solution, so that you will not be trapped with these challenges. The first problem is the fear of missing out on big trades. This happens when you have traded the market for a very long time, and you know how the market can move very far in certain trades and very slow on other trades. Now, the problem comes when you see a setup that looks like that setup that usually get you results for big trades, but now something is off about this trade, and you can see that it is actually different from the ones you have been trading before. But since you don't want to miss out from that big trade, you rush into the trade and take it anyways, without a clear confirmation, because you don't want to miss out on that big trade. And that is the trap. You enter into the trade and you lose the trade, and then it happens again and again and again. This way you are constantly deceived by the market because of your desire and greed to enter big trades without having a clear confirmation from your strategy. To escape this, you have to wait for a full confirmation of your strategy from the beginning to the end, and you will not take any trade, no matter how good it looks, unless it respects your full strategy to the latter. The second problem you will face while going through the Proman segment is recklessly trading instead of backtesting. Sometimes it's best for a trader to take some time out from the market, especially when you are going through some losses, and focus on backtesting your strategy to know where you are actually getting things wrong. You need to go back to the dark room and figure out exactly what is really happening. The truth is, when you are going through some crazy losing streaks, no matter how good you are, if you keep on trading, you are still going to lose more money, as your mind is not in the right position to make profits, as all you are doing at that point is revenge trading. So, when you find yourself in that kind of situation, you stop trading immediately and go back to the chart, and then begin to backtest your strategy again, until you are fully aware of what is really happening. The Forex market is not a market that moves on its own. Everything that happens in the market can be explained, and if you have gotten to some certain level in trading, you will understand exactly what I'm talking about. Each time you find yourself losing consistently to the market, close your trades and go back to the dark room or your mentor, if you have a good relationship with him, and there, the solution will be figured out. The third challenge is lack of patience. When you have been trading for a very long time, and you have been winning for a very long time, at times, there will be this rush in you when you see a new trade, and you will seem to be less patient for the market to unveil itself. Because at that point, you think that you know every move in the market, and you are too confident on what is going to happen, and this lack of patience will lead you to a lot of unprofitable trades. The solution to this is very simple. Always wait for the market to unveil itself fully before you enter a trade. Do not rush into entering a trade. Always be patient, because you can't control the market, but you can actually control yourself. The fourth challenge you will face as a pro is placing too many stop loss. Okay, now this will sound so amazing, coming from someone who has advocated trading with stop loss for a very long time. But if we become true to ourselves, we can all agree that sometimes in the market, our stop loss always do us bad. Now let's take for example, for some markets, where there is a lot of volatility, what happens is that you can place your stop loss to only take a risk of $150, but at the end of the day, the market will hit so fast that it takes away your stop loss, and then goes down beyond the level you placed it, thereby making you lose more in your trade. So instead of your initial risk of $150, you will be left with more risk of up to $200 to $250, depending on the strength of the volatility. What I like to do in some cases, when I notice this type of market, is that I will leave only the $150 in my trading balance before taking the trade. So each time the market makes those kind of move against me, it will only take the $150 in my trading balance and not give me some additional losses. So if you are trading in those types of markets, especially with the major currency pairs, you should always be careful about placing your stop losses. And copy my tight risk concept. The fifth challenge that you will face as a pro is trading without an emotional balance. Sometimes you can lose a trade because you broke up with your girlfriend, or because your dog died, or because you are so angry with your neighbor that plays loud music, or maybe because you were not invited to the party last night. You know those emotional things that can happen to you, and if you are not careful, those emotions will blind your vision when you are trading. So instead of placing a buy position, you will remember your girlfriend, I mean your ex now, and you will sell the market. That's so funny, but it happens like that a lot. When your emotion is not balanced, it will lead you to make a lot of funny decisions in the market, which you will not make on a regular day. When you are trading and analyzing with a clean and positive state of mind, if you feel like you are down with strong emotions, let's say you lost a loved one and all of that, please leave the chart for the meantime and concentrate on your reality. I am so happy to share with you all some of my trading experience and the things that I will do if I was to become a beginner again, and I hope you all found value in this, and it will help you all in a very long way, so you can have a better and smoother trading journey than I did. In this video that will pop on your screen right now, I will be teaching you on how to start Forex trading professionally, from a beginner to a pro level. It contains a 7-episode series, and this is the first episode, specially from the Trading Chief. Enjoy.